Good evening to all the participants, and thank you for giving your time to JM Financial for our monthly webinar on the market outlook. Just to keep it short, I will say that it's a choppy phase which the markets are dealing with. It's been 5 to 6 trading sessions that Nifty index has been stuck in a range. The range lower end is 23,200 and the upper end of the range is 23,450. And sooner or later, the chances are that there is going to be a breakout of this range. Now, which way will this breakout is the question, because there is a lot of confusion in the market. We are in times where on one side, there is news about geopolitical pressure in the market, where every alternate day you have some positive news. Some days you have negative news on the US-Iran war. And really there is a lot of confusion among traders as to when will the war stop or will there be further escalation in the war. So these things will continue and we should not stop trading. We should continue with the view because vague statements will keep on coming in the market. There will be confusion. So let's keep the noise aside in terms of the global tensions, whatever is happening. Even from the domestic, if you see the news process today was the bank policy. There was a lot of expectations that there might be some relief in taxation measures on equity markets for the foreign institutional investors. Yes, there were some measures which have come by, but they have come for the GSEC market. So nothing in store for the equity markets, and hence you have a scenario where markets are waiting for fresh cues to stage a direction for the month of June. Now, one positive thing what I see for the month of June is that if you look at the historical data for June, out of the last 11 June months, right, last 11 June months in the past few years, 8 months in June seasonally have been positive for June. So if you go by the seasonality aspect, June traditionally is known to be a positive month. So we will stay with the same theme irrespective of the noise which is happening all around us, that June will be a positive month for the market. Now, with a positive view, we also need to give importance to the levels as well, because till certain levels on technical price parameters are holding, we will continue to maintain this view. So the most important technical level which I see on the price charts for the month of June is the support of 23,000 odd levels. 23,200 is a short-term support, but we will give importance to the 23,000 support. This is because there can be some fluctuations around 23,200. There can be some negative technical breakdown. There can be some levels where probably it may trap the traders. So we are giving it a buffer of 200 points. And also 23,000 being a round figure, it is a point where a lot of option writing positions are placed for the weekly expiry as well as the monthly expiry. So when we say option writing, we conclude that these are more of put writers who are providing a support in the derivatives market for the Nifty index. So we have a support of 23,000, which is very clear that till market holds about 23,000, we will continue with a positive view for the June month. There may be some choppy trades in and between, but till 23,000, let's put our trades on the positive side or go with a positive view. Now on the upside, where is the resistance? If things follow the path as it is, leaving aside the noise and the news front, 23,800 is the first level of resistance. This is for short-term trading, and then comes 24,000, which is an important psychological level where lot of call writers or where the resistance in options market is placed. So for any short covering, if we were to talk of, this is the important level which the market has to take off, or if we were to talk about trend reversal scenarios in the market. So 23,000 and 24,000 is the range. We will continue to be a buyer in the markets till 23,000 holds. And on the upside, 24,000 area, if it does go, is the first level of stopover target where we need to take a review of the stock of the situation and decide the further course of action. Now, an important development within this entire action is the FIIs, the foreign institutional investors. If you read day in and day out in many of the financial newspapers, there is some bit of a panic which is created because of the FIIs pulling out money from India. Now, why they are doing so? Where exactly are they going? Those are different questions with different answers. But we will stick to the logic that FIIs are pulling out of money out of India, and the data points, if you were to look and in terms of the numbers, the inflows in India are not so good at the given moment. So some strict measures from the government is what is needed if this scenario or trend has to change. The long-short ratio, that is how the FIIs are positioned in the F&O market, stands at 8% longs compared to 93% shorts. Yes, you heard it right. There are 93% shorts in the index future segment. When I say index futures, it is Nifty, Bank Nifty and the Fin Nifty index which are traded on the exchange. So yes, this is the reality. There are a lot of shorts in the system, and time and again, any bounce backs which we see in the market because of this selling, the markets are noting some bit of pressure at every higher level. So you may ask me now, who exactly are supporting the market? So last 4 months, it has been the domestic institutions who have been time and again offering the support to the market. Our SIPs from mutual funds have been offering the needed support. So that is where the support is coming from, selling from FIIs and support from the DIIs. And this tug of war situation has been on since the last few months, as I may call it, in this geopolitical tensions which is going on. I think it's the 5th or 6th month that this has extended to. Now, how would you trade such markets? Because it's very confusing. Even intraday trading sessions are getting difficult by the day, considering the range bound scenario. But if you approach with a clear view, first, if you are taking a position in futures, then as I said, till 23,000 holds, let's take a view on the buy side if you are a directional trader. And if it goes on the expected lines, 24,000 first will be our target. And if it goes further, we are looking for extended targets till 24,500. Now, we have to see the other way also, because in case supports were to breach, if the FII selling scenario continues, then what? If 23,000 breaks, then the support of 22,200 that was tested few months back again comes into picture. We are not as of now discussing those negative scenarios, but let's hold on to the market till 23,000 holds. Sometimes derivative markets also come as a blessing, because when there is such confusion as to whether supports will hold or supports will break, when this question mark come, then the best strategy sometimes to approach such market is buying calls and puts both of different strikes, ideally 23,000 put and 24,000 calls, when you expect this range to break either way. So I think this is one of the best strategies to play volatility when you are expecting a directional move to unfold soon. So my sense is that looking at the current market setup, it is high time that a direction of minimum 500 points on the Nifty is under play. That may happen any day on some news front which may hit us, and that may happen probably by 15th, before 15th of June. That is my sense. So if you are keen on playing out this move, you do not know which way it will go, then using options to the best of the game is what I would recommend. Buy 23,000 put for Nifty and buy 24,000 call for the 16th June expiry. We also have recommended a similar strategy on these lines to play out the volatile move if it breaks either side of the range. Our preferred view is that 23,000 should hold, and we might see some bit of a bounce back recovery. This doesn't mean FIs are covering back their shorts. It is more of a trading view which we are looking at. Now as we have a clear view in place, what are the other things we should be watching for? So one important thing which we look here is how the monsoon progresses, because that is one news which will keep some bit of which may impact the market from the short-term perspective. The second is the geopolitical news, because that will have an impact on the market time and again. Any statements which have come out from the US or whether it from Iran will have temporary repercussion on the Indian market. So that will have its impact, but we will stick to the levels as mentioned. Now, which sectors should do well in all these confusion? Because the market breadth has been improving on and off, it is difficult as to what exactly will move, because it's more of a trader's market. Someday you have power sector moving up, the other day suddenly there is a metal sector which goes up. Which sectors you should be looking for in this market? So a couple of sectors which I like at this point of time. First sector you should be watching is not more of a sector, it's more of a group which is catching momentum since the beginning of the June series, and that's the Adani group. Now, why is it happening? There are a lot of fundamental news to back it up, but what my understanding is, going by the derivatives data, there's a strong long or buying additions which is seen in majority of the Adani names which have positions in the F&O segment. So Adani group is getting the buying momentum from the futures and options segment. There is strong positive traction which we have noted in the last 4 days, and the belief is if the market is giving you opportunities, go for buying in the Adani group names, because that seems to be the theme for the month of June, and we have already positioned ourselves in majority of the names. If we look at our intraday calls, all major Adani names which have options presence in futures presence have been covered in our trading calls. Adani Energy, Adani Green, Adani Ports, Adani Enterprises, Adani, all these stocks which have a presence in futures and options have been covered. So that is one the group you can look forward to if you want trades on the buy side. That is the Adani group, and I believe the momentum should continue here, and easily 4 to 5% further upside can be looked forward from the current market prices. Another sector which might again see some kind of a recovery from the lower end, but you have to be very selective there, is the IT space. Now, IT space has been in news because it bounced by 8 to 10% at the beginning of June, but suddenly the next couple of days you have 4 to 5% correction. So when you are choosing stocks in ITs, be very careful. There are only limited stocks which have strong technical and derivative setups. If I were to name them, Tech Mahindra has emphasis, persistent. These are the three stocks which have good positive positioning in derivatives and strong technical setups. So I think these three names you can look forward to if you are buying, because still I'm not really sure from the short-term prospects on TCS or Infosys, but the three names I mentioned can be looked for buying opportunities, and we will give you the proper levels to enter if you follow our broadcast channels and WhatsApp channels in our trading recommendations. So very selective stocks which you should be looking forward in the month of June. There may be some seasonal demand for fertilizer stocks because they are more seasonal in nature, but really this is more of a monthly expiry view. We are concentrating on futures and options when we do not have many stocks which have presence, fertilizer stocks which have presence in futures and options. So I will give this more of a miss. So look at Adani Groups, that stands the primary driver for the month of June. The other stocks will have mixed reviews. They are more for trading. There is no clear theme that there will be a one-way rally in any of them. In pharma, you can look at selective names in pharma because again, it's a mixed move which we have noted in the last few days. To name a couple of pharma stock, Divi's Lab, we have a buy recommendation from the fundamental desk as well. Even the technical team has recommended the same, and I believe this will be one good name to build your buying bets in from the pharma space. Aurobindo Pharma also looks good from a short-term momentum buying perspective for the month of June, and Laurus Lab is one stock which we have covered in the option segment on the buy side and is doing fantastically well in our trade. So these three names can be looked forward to from the pharma space. So this is the broader outlook for the month of June for the Nifty index. If you were to strategize this, I have told you that right now we would not look at the monthly series for the strategy because monthly series is too far. 30th is the expiry. There are a lot of time days to go for 30th. So let's concentrate on the weekly expiry. 16th of June I think buying strangles, buying call and put in expectation of a directional move is the best way out. 23,000 put and 24,000 call, buying both in anticipation of a 500 point one-way move should bode well for the first half of June, and that is the best strategy we would recommend in the current market scenario. So just to sum it up, again, June seasonally is known to be a positive month, so keeping fingers crossed. 23,000 stands an important support for the market. Till 23,000 holds, you can expect this choppy trading session to give way to a positive breakout, where 24,000 and 24,500 can be the two working targets you can look forward to. And any buying positions have strict stop losses, or any option selling positions have strict stop losses below 23,000, because if that breaks, then the scenario for market changes for the month of June. Sectors to watch, as I mentioned, Adani Group is one group you can look forward to from the buying perspective. So I'll conclude my part here. We will be sharing the presentation soon on our social media on the same, and keeping the forum open for any Q&A session. Stock names besides Adani, I have taken Divi's Lab in the pharma space. You can look forward to that on the buy side. It is more of a positional call. We have a fundamental report on the same, and we believe that in the coming months, this stock should do well. Looking at 8 to 10% plus gains from a positional perspective. This is not trading. This is for positional. If you are keen on momentum catching, look at Laurus Labs on the buy side, where we have options call we gave, which is in profits. We have booked out part, but targets are pending on that. This is more of a momentum call. And further in pharma space, Aurobindo Pharma can be the other name, where you can look forward to buy from a momentum perspective with a shorter time horizon, with a stop loss of 2% from your buying price. So right now, 9 June is this coming Tuesday. And, again, I would say that follow levels, because I think 4 days have passed where Nifty is stuck in a range of 23,200. And upside is 23,450. Right now, let this range break. If 23,200 breaks, we are shorting the market. If 23,450 breaks on the upside, we are buying the market. Any breakout of either side of the range is a technical breakout, which sets up for a minimum 250 to 300 point move. Which side are you expecting this breakout? If you ask me to put my neck out and take a trade, then I would say that there are good chances that this breakout can be on the upside.
Thank you, Akshay.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.